In June of this year, SpaceX raised the largest IPO in history. The company is valued higher than most nations. It also loses money. The pattern isn't unique to SpaceX. It's happening across the entire AI and tech landscape. And it's the same pattern aerospace followed right before it stopped getting faster. We're going to look at why industries that change everything often destroy the people who build them. How the arc of artificial intelligence might look a lot like the arc of rocket science, and who actually wins when the infrastructure gets built but the builders don't survive. Chapter 1. Why is the most valuable company in history losing money? The company behind one of the most popular AI products on the planet spent roughly $1.70 for every dollar it earned last year. Think about that. 900 million people use what they built. The more people use it, the more money they lose. This isn't a startup in a garage. This is one of the two most prominent AI companies in the world. The other one is valued at nearly $1 trillion and is also losing money, just at a slower pace. The standard explanation is that this is fine. They're investing. The infrastructure costs are front-loaded. Once the models are built, the margins flip. That's what people said about fiber optic cable companies in the late 90s. Look, I spent 30 years watching technologies go through this cycle. The story is always the same at the start. Massive investment, visionary promises, losses framed as growing pains you have to accept. Sometimes the story holds, sometimes it doesn't. And the difference between the two depends on something most people aren't watching: whether the technology hits a ceiling. Chapter 2. What happens when a technology hits a ceiling? Think about aerospace. The Wright brothers flew in 1903. 66 years later, Neil Armstrong walked on the moon. In one human lifetime, flight went from a bicycle shop in North Carolina to the surface of another world. Then something interesting happened. After the Apollo program ended, no human left Earth orbit for over 50 years. The Artemis mission finally broke that streak earlier this year. But the fact that it took half a century to return to where we'd already been tells you more about the shape of progress than the accomplishment itself. Commercial flight today isn't faster than the Concorde was in the 70s. We added wingtips to planes for better fuel efficiency. We upgraded the electronics. But the fundamental capability plateaued. The low-hanging fruit had been picked. The same dynamic applies to AI. The early gains came from compressing existing knowledge into a new form. The internet, massive datasets, everything humans had already written down. That's what gave us the leap from early language models to the ones we use today in just a few years. The next leap requires new data, new architectures, new physics. Those are exponentially harder and more expensive. Lynn Alden, an investment strategist who writes about technology cycles, made a comparison worth holding on to. She said AI is likely to follow the same arc as aerospace. A rapid takeoff where everything gets dramatically better, followed by a softer ceiling where the remaining improvements are incremental, and the cost of each step rises faster than the benefit. Even the people building it are showing signs of realizing this. One of the largest AI companies quietly reduced its planned infrastructure spending by more than half. The semiconductor industry's own version of Moore's Law has been declared dead by its most prominent executive. If the hardware stops getting cheaper at the historical rate, the whole equation changes. Chapter 3. Who wins when the infrastructure gets built, but the builders don't? Here's the pattern that repeats across history. In the late 1990s, telecom companies invested hundreds of billions of dollars laying fiber optic cable. The internet needed that cable. The demand was real. But the companies that built it overestimated how quickly the demand would arrive. They took on too much debt, then they collapsed. Some of the largest companies in that industry went bankrupt. Executives cashed out early. Bond investors recovered about 20 cents on the dollar. But the fiber optic cable they laid is still in the ground. The internet boomed on top of their ruins. The infrastructure was absolutely necessary. The companies that built it just couldn't capture the value. In Australia, we've seen the same pattern with mining booms. The companies selling the equipment and services make steady money. The companies digging for resources make dramatic profits when prices are high and catastrophic losses when they're not. Right now, the company making the chips that AI runs on is profitable. Very profitable. The companies building the AI models themselves are losing money across the board. The picks and shovels supplier is making all the profit. The miners are burning cash. This is the structural dynamic that most analysis misses. The question isn't whether AI will change things. It already has. The question is whether the companies building it can capture the value they're creating. History suggests the answer is often no. Chapter 4. What survives after the plateau? The common belief is that AI improvement is a straight line going up forever. More data, more compute, better models, unlimited growth. The evidence suggests a different shape. The aerospace arc, steep takeoff, then gradual plateau. The fiber optic arc, massive build-out, then consolidation. In each case, an early explosion of capability and investment, followed by a period where the builders overextend, followed by a shakeout. What survives a plateau? Three things. Infrastructure, the chips, the data centers, the network. Those get used regardless of which model companies survive. Every gold rush ends with the people selling the tools doing better than the people digging. Practical integration. Companies that can weave current AI capabilities into existing workflows have an advantage over companies betting everything on a breakthrough that might not arrive. If AI improves incrementally instead of exponentially, the edge goes to the implementers, not the inventors. And then there's the question of capital. When the ceiling appears, the money flowing freely starts asking harder questions. We're already seeing signs of this. Infrastructure spending targets are being cut. Valuations are being questioned. The easy money phase doesn't last forever. I'm not saying AI won't change the world. It already has. I'm saying the shape of that change matters. The aerospace industry changed the world. The people who built the first planes didn't end up owning the airlines. The people who laid the fiber optic cable didn't end up owning the internet. The people building the most ambitious AI systems right now may not end up owning the value they create. If there's a system you want me to pull apart next, a market, an industry, something that feels like it's running on assumptions that might not hold, drop it in the comments. Because the patterns repeat. The names change, but the shape of the arc is visible if you know where to look.